Crypto signals are everywhere in 2025, but can you really trust them? In this video, I reveal the shocking truth about crypto signals that most traders don't talk about. If you're using signals or thinking about it, you need to see this first. Like, subscribe, and let's expose the reality together. The content provided in this video is for informational and entertainment purposes only and should not be considered financial advice. Always conduct your own research and consult with a financial advisor before making investment decisions. In the ever-evolving world of cryptocurrency trading, one question continues to stir heated debates among beginners and experts alike. Can you really trust crypto signals in 2025? As the crypto market matures and becomes more accessible to the masses, the popularity of trading signals has skyrocketed. Telegram channels, Discord servers, mobile apps, and social media influencers all promise incredible returns. Some even claim daily profits with minimal effort. But is it too good to be true? In this video, we expose the shocking truth about crypto signals in 2025, unpacking what works, what doesn't, and what you need to know before placing your hard-earned money on the line. Whether you're just getting started or have already been relying on crypto signals, this is your wake-up call. The rise of crypto signals. What are they really? Crypto signals are essentially trading recommendations or alerts. These alerts usually contain detailed instructions on which cryptocurrency to trade, the suggested entry price, stop-loss level to limit potential loss, and take profit targets to secure gains. They're designed to help traders, especially beginners, capitalize on price movements in the market without spending hours analyzing charts or mastering technical indicators. In 2025, these signals are more accessible than ever. Telegram and Discord communities deliver real-time signals to thousands of followers, while AI-powered apps claim to scan the market 24/7 and generate winning trades automatically. Some providers offer paid subscriptions with promises of 95% accuracy, while others flood social media with free signals and testimonials of instant wealth. But is all of it real? The shocking truth: most signals aren't as profitable as they seem. Here's the truth most signal providers won't tell you. Not all crypto signals are reliable, and many of them are either poorly researched or outright scams. In 2025, the crypto signal market is both booming and bloated, with countless channels popping up to exploit beginner traders' fear of missing out. FOMO. Many so-called experts provide signals with no analytical backing. They rely on hype, copy-paste from other channels, or worse, intentionally manipulate small-cap coins in pump-and-dump schemes. These providers highlight only their winning trades while conveniently deleting or ignoring losses. Others sell VIP memberships and use screenshots of past trades to bait users, while offering no real accountability or transparency. Even legitimate providers can't guarantee success. Markets are unpredictable. A sudden regulatory announcement, market-wide panic, or whale movement can invalidate even the most well-researched signal. The shocking truth is this: anyone who promises consistent daily profits without risk is lying. How scams are evolving in 2025. Crypto scammers have gotten smarter in 2025. Gone are the days of simple email phishing or obvious Telegram frauds. Today, scam signal groups are sophisticated, polished, and often promoted by influencers or fake review sites. They use well-edited videos, deepfake testimonials, and fake trading dashboards to lure unsuspecting traders. Some even offer demo accounts that simulate fake success using past data or manipulated apps. Once they gain your trust, they upsell VIP packages, ask for crypto payments, which are untraceable, and then disappear. Others keep you hooked with one or two winning trades before feeding you a string of losses. The damage is not just financial. It also destroys confidence and discourages newcomers from exploring crypto trading altogether. Can signals still work in 2025? The honest answer is yes. Crypto signals absolutely do work, but only under specific conditions. The key is to separate legitimate, data-backed signals from the noise. Reputable providers rely on technical and fundamental analysis, follow risk management principles, and track their performance publicly. They don't guarantee wins, but aim for long-term profitability, with a 60–75% success rate. These high-quality signal services are often run by professional traders, hedge fund analysts, or algorithm developers. They may charge a fee, but they're upfront about the risks and performance. More importantly, they educate their subscribers, teaching them how to interpret the market and not just follow blind instructions. If you use signals from such providers combined with your own basic trading knowledge, you increase your chances of success. Signals shouldn't replace learning, they should enhance it. The best traders use signals as one of several tools, not a crutch. How to identify a trustworthy crypto signal provider in 2025. In a saturated market, finding the right crypto signal provider requires a bit of effort, but it's worth it. Here's a straightforward guide to spot a reliable service and steer clear of scams. Signs of a trustworthy provider. 1. Transparent trade history. Reliable providers openly share their past trades, clearly listing wins, losses, total trades, and accuracy rates for a specified period, ideally the past week. 2. Clear signal schedule. Good providers clearly state when signals will be published, or at least provide a reliable time frame. They also indicate the expected number of signals per day. After all, you can't be glued to your screen 24/7. 3. Straightforward directions. Each signal must explicitly state trade direction, e.g. the long, short, or up-down. Vague instructions aren't helpful in real-time trading. Red flags of scam signal providers. 1. Multiple ambiguous targets. Scam groups commonly use Target 1, Target 2, Target 3 approaches. This method is problematic because prices differ across exchanges, sometimes significantly, making precise targets meaningless. Directional instructions, up or down, are universally actionable and reliable, regardless of minor price differences. Additionally, these targets often aren't realistically reached. When they fail, providers deceptively relabel lower targets as successful hits, falsely inflating their accuracy. 2. Unexplained or unrealistic stop losses. Scam signals often include stop-loss levels without clear reasoning, typically set too far from active market prices. By the time the stop-loss activates, your portfolio might already be critically damaged or wiped out entirely. 3. Overly complex explanations. Excessively complicated signals or explanations that sound overly technical or academic are usually red flags. Trading signals should be simple and clear. Enter now, direction, up. Exit now, congrats on your profit. Or simply, exit, it didn't go our way today. Anything else is distracting white noise, often meant to conceal poor performance. 4. Unrealistic performance claims. Avoid services that promise 100% accuracy or instant profits. Realistic signal accuracy starts around 53%, with trustworthy signals generally ranging from 60% to around 90%. Anything promising consistently above 90% without credible justification is likely a scam. 5. Lack of practical education. High-quality signal providers explain the logic behind their signals and offer practical trading strategies. Crucially, these strategies should be easily understandable by anyone with basic trading knowledge and standard English proficiency. Signals requiring deep technical or academic expertise signal caution. 6. Poor or non-existent community reputation. Reliable providers have a visible presence: social media accounts, websites, support teams, email contacts, and responsiveness. Providers offering only a single anonymous Telegram nickname or no substantial online presence should be avoided. An easy indicator: if a Telegram channel doesn't not allow unhappy emojis for postings, therefore never acknowledging losses, that's a strong red flag. How to safely evaluate signal providers. Always begin with a demo account. This allows you to test the provider's reliability over a few days without financial risk. Only if a provider proves consistent, transparent, and trustworthy should you consider using real funds. And even then, start cautiously with small trades. Why most beginners misuse signals. The problem isn't solely about poor signal providers. It's often about how beginners actually use signals. Many new traders mistakenly treat signals as magical shortcuts to instant wealth. They overlook essential steps like defining exit strategies and setting clear, acceptable risk limits. Here's the right way to utilize signals effectively, using Signal CLI as an example. Step 1. Read the wiki. Signal CLI provides a detailed wiki explaining trading strategies, recommended trade sizes, volumes, leverages, and modes. Taking the time to read it thoroughly sets a solid foundation. Step 2. Conduct online research. Do a quick search, and you'll easily find press releases, articles, and forum discussions outlining a recommended trade configuration. A reliable setup suggested by Signal CLI typically looks like this. Bet size $1 and $3 per trade, where $1 indicates uncertainty and $3 strong confidence. Wallet balance, approximately $200 and $300. Leverage, around 200x. Margin type, cross margin. Order type, placed by cost. Step 3, signal checklist. Before entering any trade based on a signal, ensure at least 2 out of the 4 available modes confirm the same trading direction. You're currently in the green zone. Signal CLI clearly outlines trading zones behind the paid wall. Your own independent analysis confirms the direction indicated by the signal. The signal aligns with the overall market trend for the specific cryptocurrency. You've planned your exit strategy in case things go sideways. Mark your exit clearly on the chart. You've also identified a target price line, where you'll take your profits. This structured approach represents a genuinely useful signal provider. Notice that it doesn't promise overnight riches, but provides all the necessary tools and transparency. With minimal effort, you can access comprehensive trade histories, available directly on their website, active social media accounts, and responsive support teams. Additionally, you can join their free Telegram channel first to get a real-time feel for their signals before committing. On a side note, they have no limitations on their postings, so feel free to leave any emojis you like, freedom of speech at its best. Moving on, in 2025, crypto markets move incredibly fast. A signal that arrives even a few minutes late can quickly become outdated. That's why it's essential for a reliable provider to announce signals clearly and ahead of time, specifying either the exact time or at least a clear time frame for publication. Traditional signals typically state something ambiguous, such as, buy BTC at $110,000. But what if on your exchange BTC never even touches $11,000? Perhaps it's stuck at $9,000, or it surpassed $11,000 yesterday and now hovers at $11,000. Do you enter now, or is the trade invalid? Compare this to a signal stating simply, enter now, direction, up. Such a signal is universally actionable because even if your exchange's pricing slightly deviates from the majority, the directional movement remains consistent. This clear, unambiguous approach ensures you always understand precisely what your signal provider intends, allowing you to trade confidently without confusion or guesswork. The role of automation and AI in signals today. One of the biggest game changers in 2025 is the rise of crypto signals powered by automation and AI. Today's bots and algorithms constantly scan thousands of data points, exchange order books, sentiment analysis, whale wallet movements, and social media chatter to spot opportunities faster and often more accurately than human traders. But let's be clear, AI isn't magic. Sure, algorithms remove emotional biases and can rapidly process volumes of data beyond human capacity, but they're not infallible. Black swan events, unexpected news, or sudden market shifts still catch even the smartest AI off guard. That's why the most successful traders in 2025 use a hybrid approach, combining AI-driven signals with human oversight. AI might not know about breaking news that's going to shake the market today, but humans certainly can, making informed decisions and trading sensibly during volatile periods. So, can you trust crypto signals in 2025? Absolutely, you can and you should. Trading without quality signals today places you at a substantial disadvantage. Exchanges now rely on immense computing resources, sophisticated algorithms, and powerful self-learning AIs to drive market movements. Expecting to outsmart these tech giants on your own is overly optimistic. However, a bad signal provider puts you in an even worse position. Carefully vet your provider before using their signals. A legitimate, reputable provider evens the playing field between you and those powerful exchange bots, giving you genuine opportunities to regularly profit. Is it overnight riches? Definitely not. But it can become a consistent, very welcome supplement to your regular income. Now you understand the real truth behind crypto signals in 2025, the good, the bad, and the risky. Are you convinced signals are worth it, or are you reconsidering? Drop your thoughts in the comments below. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more honest crypto insights every week.